institutional money is desperate to be part of this, and you're saying the opposite.
Well, I'm not. We are not having those conversations, and maybe they're talking to somebody else. So I'm not. I don't want to suggest that we have perfect information, but our broad-based client relationships we've had very little interconnectivity on the conversation on crypto, other than a fascination. I could tell you.
Some news this morning. Blackrock has now officially partnered with Coinbase to make crypto directly available to institutional investors. Customers of Coinbase and Blackrock's investment management platform, Aladdin, will have access to crypto trading, custody, prime brokerage, and reporting capabilities. That integration coming 4 months after Blackrock CEO Larry Fink said the company would explore ways to offer digital assets to its clients. So an interesting move there. Meanwhile, Coinbase has not moved higher on that news. In the meantime, I want to get down to the New York Stock Exchange, where our friend Jim Cramer joins us right now. I don't know if you have a view about that. If that gives you any, kick? You know, are you excited about that? Do you think Coinbase is now
some comfort.
Have more value?
Yes, absolutely. Because some people feel Coinbase is rogue, that it's actually an exchange, it's not a company. But with discovering that it looks like the Senate wants it to go be regulated by the CFTC. Which is much more pro-Coinbase, it makes sense that Larry Fink would want to deal with them. It is kind of amazing whether Coinbase is doing the right thing or not, because they have 200 different coins that they list, and a lot of the coins are very suspect. Even Robinhood wouldn't take a lot of them. But institution wants crypto, the place to go is Coinbase.
Lisa Ellis, who calls the company, quote, the Phoenix, and has a $200 target. Lisa, this definitely backs up your case.
Yeah, we couldn't be more excited. Obviously, having to reset our outlook for Coinbase a bit in the last 6 months, given the crypto winter. But we've been highlighting in our research that we are hoping, anticipating that this crypto winter should be less severe, maybe even shorter in duration, specifically because of what Kate was just referring to and what we saw this morning with BlackRock, which is the institutional money that sort of stabilizes the market and creates support for it starting to come in. And we love this play for Coinbase. We've been, kind of pushing them on these types of partnerships. So couldn't be more thrilled to see them announce a big one with BlackRock today.
So at this point, do you want it to remain stable through an institutional lens? What happens if retail decides we're in love with it again?
Well, I guess from Coin's perspective, a lot of retail participation is never a bad thing because that's how they make a lot of their money. But look, and you hear this from Brian Armstrong and others major players in the space as well. In many ways, the retrenching that happens, the focused investment that happens through a downturn helps the industry and helps these companies over the longer term, because they're not sort of just scrambling, trying to keep up with demand, but rather actually have the time to put some of the long-term infrastructure in place, get some of these big partnerships in place, get that all the regulatory compliance infrastructure all built out, that then really creates the building blocks for the, for the mainstreaming of crypto over the long term. So as much as it's painful, it's a bit healthy for a longer term investor.
Welcome to the Crypto Teacher. And I come back with that video just to make you think. And we know we never listen to the billionaires. If we listen to BlackRock and Larry Fink, all he kept saying is that his clients are not interested in crypto. And now all of a sudden they partner with Coinbase. But guys, who's the big player in Coinbase? That's right, my guy, Andreessen. All you have to do is follow the money. But first, guys, they have to short us to the bottom and pick the winners and losers. And that's the reason why they bring in Aladdin. That's what Aladdin does. We know this is Shemitah year. So while Bitcoin is dumping, Aladdin has already ran a quadrillion scenarios and is going to move the NWO's money inside of the cryptos that are going to make it. We've already seen the blueprint from Big Tech. And then we have Manchin on the Inflation Reduction Act. And we know the bird needs both wings. The Republicans and Democrats work together when they're on the agendas. The NWO's agendas. Remember, they cause a problem. Wait for the reaction and run in with the solution. They created all this inflation by printing all this money. If the masses were not asleep, they wouldn't accept it that little stimulus money while the NWO gets trillions. And then on top of it, they're going to put them out of work. What are we seeing, guys? Layoff after layoff after layoff. And we know they haven't even gotten started yet. They're going to bring America to Babylon to its knees. But the American people are going to get what they deserve. They stay distracted on things that don't matter. The shoe is about to go on the other foot because we see the emerging markets, the BRICS nations, the rise of China the dragon, along with that digital yuan, backed by that digital SDR. And remember, the crypto teacher told you because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
With Coinbase, as you mentioned, up about 18%, though it had been even higher on a new crypto trading partnership with Blackrock, the world's largest money manager. For now, the partnership gives Blackrock's institutional clients access to own and trade Bitcoin, with possible expansions to that deal dependent on demand. That said, given Bitcoin is down 42% since early April, remains to be seen just how sustainable institutional demand is. But hey, Coinbase is down 60% for the year. For now, though, Coinbase shares today having their best day since the first day of listing on a percentage basis, up more than 45% just this week. Here to help us break it down, Kate Rooney. Hey, Kate.
Hey, John. Yeah, this is definitely a sign of legitimacy for Coinbase. So it is good news, and it's really been trying to grow the more institutional side of the business. The retail trading side has slowed down with the crash in Bitcoin and crypto prices in general. They've struggled with just trading revenue in general. That's the bread and butter for a lot of these brokerage businesses, Robinhood as well. The reason, though, I'm told the stock is skyrocketing is a short squeeze. So about 22% of the tradable shares out there, or the float, are sold short. S3 Partners put it closer to 21%, but they say that's nearly 4 times greater than the average U.S. stock right now. Coinbase is the 36th largest short right now in the U.S. market. So some short covering going on this morning, likely accounting for that huge rise in Coinbase shares. Also one of the most mentioned names on Reddit. So we may have a little bit of a meme stock situation going on here. But the stock has had a pretty rough run in 2022. It's been down significantly. So this is sort of a relief rally we're seeing, and likely some short covering.
And so you bill it as an Inflation Reduction Act, but some of the early studies coming out, Senator, are saying that it does nothing to fight inflation, especially in the near term. So isn't that a bit misleading of a title?
Well, it's a bit misleading for those who come out and said that, because there's been so many others that looked at it so favorably. Sarah, I think just the common sense. I know I've been involved with 17 Nobel laureates telling me back in March, almost over a year ago, that inflation would be transitory. And the figures I saw and everything I was evaluating said it would not be. It would be very detrimental and harming to our economy and to the people of America, and harmful to West Virginia. And guess what? That's what it turned out to be. So I know different people have different opinions. Sir, what we're doing, we're basically paying down debt. We're fighting inflation by putting more production out in energy, produce more oil and gas, and making sure that our fossil industry can carry the load. We're making investments for more jobs, more energy, more jobs here in America with clean energy. So we're basically taking care of the needs of energy now and basically investing for the energy for the future. And we're doing all that while we're reducing the amount of inflation or the amount of prices for corporations. This only affects, Sarah, companies that have $1 billion of revenue or greater annually that are even going to be evaluated this way to pay a 15% minimum. And I just can't believe that these patriotic companies don't want to help this country defend itself and be able to do what we need to do to be the superpower of the world.
Well, JCT found that 50% of those companies would be America's manufacturing companies at a time where Senator Manchin, we're trying to reshore American manufacturing, aren't we?
Right. Well,
so doesn't that hurt their hiring and investing decisions?
Well, if you thought it was going to hurt, don't you think the last 2 years you've seen record capital investments, and you've seen the least amount of capital investments with record profits. So only thing we're saying is the thing they tell me most is reliability, making sure this government will let them do their job, permitting regulations. And that's what we're going to basically accelerate and streamline to where people can, we can do things and build things much quicker than we ever have in the past.
Disagree. They say that the tax in 2023 alone will reduce GDP by $68.5 billion, cut labor income by $17.1 billion. That's problematic.
I've heard all our debt, $300 billion. Haven't done that in 25 years. Not in 25 years. We're paying down debt. Okay? We're
but that doesn't
increasing
come for
production
5
of the
years.
energy.
Sorry to cut you off, Senator Manchin, but if that is the reason this is disinflationary, that the deficit reduction doesn't happen for 5 years.
No,
that doesn't do anything about inflation now.
When's the last time, sir, you saw the intent of us paying down anything? In this, we're 30.5.
No, we have to tackle our debt for sure. I'm just going back to the inflation question.
Okay.
And do consumers that buy whatever the manufacturers are making, and it certainly doesn't look like an Inflation Reduction Act, but there are some, I think, unintended consequences that would not be good. Have you done analysis that confirms that?
I've done some, Joe. Well, first, this is false advertising on a scale that I've never seen before. Whoever named this bill the Inflation Reduction Act should be ashamed of themselves. It does not reduce inflation. In fact, the Penn-Wharton model estimates that it will increase inflationary pressures through 2024, won't reduce the deficit until after 2027. In addition to that, there's no question that we're going to have comprehensive tax reform that generates more revenues. We're going to have to reprioritize discretionary spending and reduce it. We're going to have to end up reforming our mandatory spending programs. We're going to have to do it. But this is not the time. We have inflationary pressures right now. We have very slow or negative economic growth, bipartisan agreement over years that this is not the time to raise taxes, although ultimately we're going to have to. This is pure politics.
And
we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team Save the Village. Part 2. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.